Hi everyone, I'm Michael here, and welcome to my sweet luck. We have completed the Dhandho framework, which was the previous chapter, chapter 5, and now we're at chapter 6. And chapter 6 is about, it's going to be in depth of every single framework. So, chapter 6 will be about the first framework to invest in existing businesses. Dhandho 101. All right, so come, let's get started. All right. Stocks do better than virtually all other asset classes. The first stock market was formed in 1790 in Philadelphia, followed by NYSE, New York Stock Exchange, in 1792. A stock is an ownership in an existing business suggested by Benjamin Graham. 6 big advantages the stock market offers versus the buying and selling of entire businesses. So basically what Monish is suggesting is that rather than buying a business wholly, completely, you should buy a piece of it. So what are the benefits or the comparison of it? All right. So number one, when you buy an entire business, either you run it or find someone to run it. Number two, when you buy a stock, you can share in all the rewards of business ownership without much effort and can choose the compound duration. The key, participate using Dhandho investing framework. Number three, the prices in stock market are determined by an auction process. This leads to wide difference between the value of a business and its quoted price. That's where you profit. Number four, you need huge capital to buy an entire business while you can start with little capital in the stock market. Number five, with the power of internet, you can buy a stake in publicly traded businesses around the world while it can be fairly hard to find private business for sale locally. And yeah, it has to be a great business as well. Number six, the cost of buying and selling in the stock market is lower, usually around $10 compared to 5 to 10% when you buy or sell private business. Ultra low frictional costs are a huge advantage. So, ownership stake in a few businesses is the best path to building wealth. It's the Dhandho way to go. It depends on the people, on the person, who you are, and what sort of experience you have. But this is basically the Dhandho way. Right? Obviously, yes, it is the Dhandho way because you're gonna minimize your risk by just taking a pieces of business, like investing in just certain parts. So buying stocks, that would be a great way of minimizing risk rather than buying an entire business, unless you really do know how to run the business or you have found someone to to run and operate the business, like how Warren Buffett and Charlie Munger, they do that. They have great managers to run those companies. So to reach there, the best way to get started would be buying stocks. Thanks a lot, Barbara. Thanks. All right, so thank you for watching, thank you for listening, and do subscribe to my sweet luck. Do give some comments and suggestions or ideas. Let's discuss about this more and more. Let's exchange ideas. Thanks a lot. Wish you my sweet luck. Bye bye.